Hey everybody, hey traders, Chris Pulver here. Welcome to the weekly outlook. It is the week of December 14th through the 18th. This is actually going to be the last full trading week of the year in 2020 until we're interrupted by some limited holiday trading during next week's Christmas break and the week after's New Year's break. So, lots to discuss today, lots of major news to take in and digest as the markets kind of scramble to make their big finale. Is it going to be a bull finale, bear finale? Is it going to be indecision, volatility? We don't know, but let's find out. So I will go ahead and move myself out of the way. Nice to see everybody, and let's have a great week. So, thought this was useful. Read an interesting article this weekend about how badly the short sellers have been getting crushed this year. I'm fortunate that I wasn't calling a ton of tops over the last 5 or 6 months. My real bearishness came in earlier in the year, starting off 2020, super bearish. That played out really, really well. I do, however, remain long on volatility. So VIXY, the VXX, and just the VIX, just your simple volatility index. I'm looking to see bigger moves to the upside. I'll show that chart in just a minute. Let's talk about some more important stuff this week. Brexit continues. We're now 4.5 years and counting. This all started back in June 2016. The European Union and the UK extend trade negotiations. And what this means for us as traders is that we have some fantastic volatility on the pound crosses. Last week, I did a video for my Keep It Seriously Simple video series. I believe it's module 11. You can find that through my channel. That video was published last week. It's just a really simple breakout strategy to trade these pound crosses. Day to day, last week, we now have 6 days in a row, literally last week, Monday through Friday, every day the pound pairs are moving. For strength or weakness, really good volatility during that first couple of hours of the London session. Today, same thing. I'll show you the currency strength chart. There are 2 tools that I use and I show in that video. Anyway, Brexit is still going on. I don't know if it's ever going to end. It's going to continue. As long as we have decent trading volatility on those pound crosses, it remains a very simple strategy to trade intraday. Brokers have jacked up margins since 2016. That hasn't returned back to normal, but still, it's good intraday trading when volatility is high. Next, COVID vaccine logistics. Emergency use authorization was granted. I know that in my home state here in Michigan, we had some big Pfizer trucks. Pfizer is in Kalamazoo, Michigan, and the negative 90 plus degrees Fahrenheit storage is going nationwide. So who gets it? Logistically, supply chain strains and constraints. It's going to be a mad rush, but I would say that it's pretty miraculous what has been done. Usually a vaccine takes 3 to 5 years. This has taken like 14 to 18 months. I know that we have Russia, China, the UK, many parts of Europe, Canada. Now the US is joining. So the vaccine is being administered worldwide, and we will see what the next 3 to 6 months looks like. Do we have enough doses to go around? As it's right now, the doses are, I believe, the Pfizer vaccine is 2 doses within 30 days or 3 weeks apart or something like that. So there will be some supply chain challenges and some logistical challenges, but we knew that going into this. Because of this, I will be watching the stock prices on Pfizer and Moderna to see where they go. We've actually had them fade off the highs a little bit recently, but keep in mind, like, Pfizer is a massive company. And as far as COVID vaccine market share, they might not be as affected as a stock price like Moderna, who is a little bit less, market share oriented. But anyway, I still think it's interesting with these kind of 2, 95% effectiveness companies hitting the COVID vaccine first, how their share prices reflect that. Next up is the U.S. government shutdown avoidance. Congress extended this by 1 week. So instead of last Friday's deadline for U.S. government shutdown, it was averted by 1 week. And we have extended that into December 18th. Now, again, is it going to be the spending bill that's passed by Congress in addition to tying in a $900 billion package for COVID stimulus round 2? We will find out. IPOs. Interesting news over the weekend. Last week I had mentioned DoorDash and Airbnb were listed. They went public, and the share prices were way above what the companies expected. Airbnb was expected to open around like $95. I think it came in and opened at like $165. So we had like a huge difference in price openings and expectations. And this little IPO debacle is being labeled as a massive misprice or mispricing. And, ultimately, stakeholders, shareholders, investors are going to be hurt by this because there's so much money getting thrown at this. It's like the big tech unicorn is out there, companies that are going public, don't even have a great track record, aren't making money, and yet their valuations are insanely high. The prices are insanely high, and it could be just a bit of a pump and dump out there where so much money gets thrown in right away, and then you see that gets faded right back down into more of a fair market value. Next up, a little bit more of a hit towards the big tech sector is that Facebook, Google are getting hit by lawsuits all over the country in the U.S. With antitrust troubles. What does this mean? We may see some type of spin-off with Facebook and Instagram and maybe even Snapchat. Again, those were competitors at one point to Facebook that have either been copied or bought. There are a lot of mergers and acquisitions happening out there in the world, but Facebook has been, notorious for that type of methodology or business philosophy, which is if they see what they, see somebody else doing it better, they either buy them or they squash them. Like it is, creating a competitive advantage for them to either buy out early tech companies or take what they do and copy it and make it better and put it on a massive user platform like Facebook. And Google, same thing with data collection and how big is Google. So this is definitely a bubbling surface below big tech, and if we start to see a Senate runoff that favors Democrats, then perhaps that majority might start looking at more of antitrust lawsuits, and you'll see big tech on Capitol Hill a lot more. We will find out. So this is going to be a continued storyline going into 2021. And finally today, December 14th, the Electoral College is finalizing the votes. As it stands right now, it looks like Biden will be around 306 and Trump will be around 232. And you can take that at face value. I'm not using that to stir up any support for Biden or for Trump. It is what it is. So we will see if the Electoral College officially finalizes votes today and what that means for the remainder of the month, what that means going into the Senate race in Georgia for January. Still, there are a lot of implications for how the presidential election plays out, as well as how Senate House votes finalize in January into next year. That's it. We have some news this week to get through. We have some stocks to take a look at. It is, 7 minutes into the video, and we haven't even taken a look at a chart. So let's do that now. All right. When we dive into the charts, let's understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. I appreciate all the followers out there on social media, mainly my YouTube channel. So make sure you click the subscribe button, notification bell, so videos like this, my weekly outlook, and my free education that I house under my Keep It Seriously Simple video series will come, and you'll get those notifications instantly when I premiere those videos. So my YouTube channel, Facebook, Twitter, and Instagram, you can find my handles right there. Let's go ahead and get into the charts. Actually, before we dive in, let's take a look at the news for this week in the Forex market. I'm going to go to the high impact first. So we have a fairly busy week. Like I said, this is the last full trading week of the year before we are getting a little bit of disruption with holiday time, which next week we have the 21st, 2nd, 3rd. I believe there's going to be limited holiday trading hours on the 24th and 5th, going to the following week to wrap up December. The 31st and the 1st is a Thursday, Friday. So we have 2 weeks that'll be interrupted by holiday trading. This will be your last full trading week. Now, how does that play out? Let's take a look, and this is something I'm going to watch every single day this week. This is the currency strength chart. Let's look at last week. This is the currency strength chart. Let's look at today. You can see this green line is the pound pair. I would highly recommend after this video, take a look at that currency strength and simple breakout video that I posted. It's module 11 in my Keep It Seriously Simple video series, because this is providing some fantastic opportunities every single day on pound pairs. Overnight, I was watching. Everything was fairly quiet, except for there were some big gaps on the pound as the trade deadline was extended between the European Union and the UK. Everything else was pretty much around baseline. The dollar was softer going into the open this morning. Active zone, 2 a.m. Frankfurt open, 3 a.m. London session, but the dollar has clawed back a little bit. We have the euro and Swiss on the high side. We have Aussie, New Zealand, and CAD showing a little bit of weakness, but the pound is the big story as far as intraday price action goes. For the calendar this week, we have some decent news to wrap up and kind of round out this entire week. We have PMI numbers coming out of the Eurozone on Wednesday. So it really kind of picks up, Wednesday, Thursday is the meat of the week. Take a look at Wednesday for the U.S. We have an FOMC rate decision with a statement and a press conference. If I go into medium impact news, you will see that the rate decision is expected to remain the same at 0 to 0.25%. I'm interested to see what the press conference reveals, if that's going to be any type of significant price action for the US dollar. We have Kiwi GDP on Wednesday as well. That's right before the rollover period. Aussie employment numbers. We have a policy rate decision out of Switzerland, which remains, and this has been negative for quite some time, but negative 0.75%. Will they have a statement to go with that starts to show a little bit of weakness on the Swiss franc? We will find out. Overall, a currency pair like the Euro Swiss, not too long ago, 2000 for up until 2015, there was an important exchange rate, and that was 1.20. Currently, the Euro Swiss is trading at 107 and change, 107.50. So I'm always interested to see, is Switzerland interested in getting its currency pair back up into a weaker stage? Because right now there are a lot of currency pairs against the Swiss that are very, very weak. In fact, until we had bottoms in March and April, we essentially had the Swiss franc as one of the strongest currency pairs of all the majors. So if there's going to be, kind of some aggressive policy stance from Switzerland to keep interest rates negative and keep holding, or maybe they just stay neutral and we'll continue to see some fluctuations. But there are some really good trade setups this week, and I want to highlight one in particular. Euro Swiss, I still really like long term, and the Swiss yen, which I recently shorted last week, and I really like that setup as well. So we'll get into the charts on that one. Anything else news-wise? No currency strength chart. Make sure you check out that breakout video. And let's talk about the SPY. Have we broken recent highs? Here's a daily chart. Okay, here's the daily chart. We have basically, once we had our post-election break, we're making marginally higher highs. Now, this, in my opinion, I'm calling the kind of, irrational bull rally. This is the path of least resistance. If we continue to go that way, we might even argue that this continuation is also where the euphoria sits in, where it's like nothing can derail the markets right now. And that is where we start to get some scary signs. If you go back into 2007, 2008, you saw that euphoria take us into 2008's trading. So we go all the way back here on a weekly chart. Here we go into, 2007, the writing was on the wall. 2008, look at this right here. Into May of 2008 is where we put our top in, and from May till the end of the year it was the demise, right? So we still had some sustained levels where the markets were just kind of grinding and churning, not really able to break these highs, but they ended up giving it back. Now, of course, is it a different environment in 2020 than it was in 2008? Yes, it is. But it doesn't mean that we're not looking at some type of technical correction. I'm certainly thinking that volatility will be higher moving into the next 3 to 6 months. In fact, I do have some positions that are favoring that VIX to spike up towards $40 or more. And hopefully, if that's the case, we just see this. It's not like I'm asking for a crash, although this would be the technical pattern for that. It is a massive megaphone pattern, also known as a broadening formation. Even if this is, from the textbook standpoint, if we drop all the way back down, then yes, of course, that is a, crazy correction all the way back down. We'd be losing everything that we gained in 2020. Do I think that's going to happen? Not necessarily. But I do think that we could have something like this. We could have some corrections back into these September swings. If you just look at this from a low to high, I could see us having some struggles to the upside, and the market just comes back for higher volatility. Now, on the SPY, I would look at levels like 320 for major support. If we break that, then that opens it up into deeper corrections. But for right now, I'm just looking at if we can't grind out these sustainable highs, then we're going to start breaking down. Now, how does it break down? I don't know. Again, the why, like WHY. Why is this going to fall? There's a combination of things that have basically been ignored by the markets this year. COVID cases, again, if we have supply chain issues with COVID vaccine, maybe it doesn't go according to plan. The election final results, the election Senate runoff in Georgia, if that sways, majority for Republicans or Democrats, we don't know. That could be a reason that 2021 starts out with a pretty sour beginning. We'll find out. Of course, I do think, just like we saw back in 2020, that any massive drop is probably going to be receiving some dips to buy from, and maybe as aggressive as what we saw here. But I just think that you have to, again, manage your risk, manage your trade size. You have to be diversified. I did listen to an article this week with Bill Ackman, who was talking about diversification. He actually quoted from Buffett. Diversification is protection against ignorance. That was a Warren Buffett quote. Bill Ackman, for example, with Pershing Holdings, I believe they have like 10 major companies that they invest in with massive holdings. Buffett's the same way. I mean, Buffett for the longest time, Berkshire Hathaway has played very few companies and just put a lot of money into them, believing in what they do and holding them long term. And that's obviously one philosophy, but I think it's interesting with now there's a lot of different ways to diversify. I think that more importantly is that traders have a chance to play multiple instruments to not only, gain from further highs, but also protect against any downside. So I think it's really important that we protect against a 30 to 40% drop. So there's something that can at least hedge us and make money as this is happening. At the same time, we are willing to buy dips and willing to buy these corrections if we see them. So one thing that's going to be hard for me to do is just buy at current levels. I will be looking at great companies. I'm still long on Amazon. I'm still long on Microsoft. I think those are great tech companies to be in. Facebook and Google are going to be under some pressure, as you're noticing with some of the stock prices. Facebook right here. Facebook. Here is the weekly chart. Let's go to the daily. There we go. So still have some sideways movement on Facebook. We're currently trading around 275. Again, March lows around 141. So we essentially went up 100% on Facebook this year from 140 all the way to 300 plus. My question is, are we going to have a high, low? All this is choppy and corrective. We might end up setting up a beautiful double top on Facebook around $300 and maybe have some shorts. Maybe from 300 down to 250. There's a good opportunity to trade some ranges there on Facebook. If you're interested, maybe looking at some puts. If this, antitrust probe gets any worse and more severe, it's going to be tough for Facebook. Okay, so food for thought on Facebook. Google, same thing. Not a lot of price action. Let me go to its GOOGL. So you can see some indecision, some massive indecision coming near these recent tops. Amazon, some big range levels right in there. I'm still long on Amazon from these lows around 29, in addition to the shares I've been holding for a while. And Microsoft, same thing, sideways, but still holding Microsoft from years ago, in addition to adding to it at $200 and trying to hold on to it. There might be some movements back up towards highs, pull back. We have highs here around 232 on Microsoft, lows around 200. With the earlier, heavy concentration in big tech this year, I wouldn't be surprised if we see some ranges forming on big tech companies, and that leads to some ranges that will be established on the larger indices, like the S&P 500. So if the SPY is going to be range bound, we can bring this September swing back into play and come all the way back down into this 320 level. So will we see the SPY drop? Possibly. If we even see it drop into this post-election level, this is around 350. So highs around 367, possible intermediate highs around 350. This is going to create some uncertainty that should bring the VIX off the lows. The DIA following the Dow Jones, we're still just clinging on to that 30,000 mark. The Dow Jones hanging out 30,100 on the Dow Jones Industrial Average. The DIA is the ETF that follows that, right at 301. Is it going to stay there? Is it going to sustain there? Or is this the big effort all year? Congratulations, Bulls, you did it. But now the reality sets in. Do we fall back into these post-election levels? Do we fill the gap from the election all the way back down to 285? Again, these September swings are really, really important. Realistically, we can make a corrective move down into these September lows and have that be an opportunity to buy the dip. In fact, if I just do the number crunching there, that would be around a $47 move. Nope, $37 move. If we do a $37 move out of a 301 share price, we're looking at about a 12.3% correction. Now, 12.3 is a healthy correction. Is it a bear market where we cross over 20% like we saw this year with 30, 40% to the downside, 40, 50, 60% to the upside? No, 12% could be a healthy correction. Correction that's within the realm of, hey, buyers can buy low. We still have to think about this K recovery, and I'll talk about that more this week in my trading room. But I'm watching. It's like, how do we go higher? Path of least resistance, irrationality. Don't be a short seller. Don't call the top. This market can run this week. This market can push in through holiday trading. That's what holiday trading does. It's lower volume. It's less of a fight. If you have structure and trends, you're typically going to see price continue in that favor. January is, December and January can be a topping and bottom type month, but unless there is some really easy to identify bearish price action, I would say that we're just going to deal with some lower volume choppiness and see this just kind of stay at these levels. Dow Jones kind of clings to that 30,000 mark. The SPY clings towards the highs. The QQQ or the NASDAQ clings towards the highs. All of these September levels, swing high, swing low, all these are realistic. Okay, tech is under some heavy pressure. Will the QQQ end up dropping back down? Let's find out this week. Okay, are we going to get some risk on, risk off trading based on how the indices move? Let's find out this week. All right, let's see here. I have a couple of stocks I want to talk about. FEAC is Flying Eagle. This is actually something that you may have heard in one of my other sessions with my team members. We do an Ask an Analyst session on Mondays for Market Traders Institute, and we had FEAC. I took some profit above 20 bucks. I'm considering getting back into this one, but this was a special acquisition company or a SPAC. And I bought this around 12 and change and closed out around 20. I'm just going to go ahead and take the profit there. The other one that I bought was KCAC, which was Kensington Capital, which became QuantumScape. And I ended up taking this one from around $13 all the way to $50. It ran all the way up to $86. So I definitely missed a huge chunk. However, look at where we are. Once this was merged from KCAC to QuantumScape, massive run to the upside. I still would have been happy, protecting it at current levels, but I missed that extra, kind of $30 run. But still, super happy with a 300+% gain on that SPAC. Another one that I'm also in right now is BFT. This is moving up to the upside. I believe there is a merger decision this week on the 16th. So hopefully this is something that from current price at $14.91 is going to be limited downside, maybe $3 to $4 to the downside, and maybe another $5 to $6 to the upside. I will say this, going into Wednesday's merger decision, if it is approved, then anything above $20, I'll be taking some profit. I bought this around, around like $12. So around $12, if it comes back down, I'll just sit and hold it for a little bit longer. If it busts up to 20 bucks or higher or sniffs that $20 level, I'll start taking some profit there. So there have been some decent short-term trades on some of these SPACs. One that I took a stance on last week, and I'm getting kind of hurt on it right now, is I took some puts. I bought some puts on Stitch Fix. This is a subscription clothing company that makes $0, but they beat expectations 2 weeks ago. And I just kind of let this move, just kind of fade out. I am seeing that on the higher time frame, we're still pretty much at the peak of momentum. I could be right on this. I have one more week, I believe. My expiration is going to be on the 24th. If it's possible, then I might get lucky on the timing. I might see this thing start to fade back down. Break even for me is around $52. So I have a target set at 50 or lower. We have a gap between 50 and 36. So anything inside that gap, I'll be very happy if my put option gains value. Otherwise, if it just kind of stays as is, I just bought puts, and so therefore my risk was already identified with the total number of contracts. So I might lose everything on that, but it is minimized compared to what I could gain on it. We'll just see what it does. I could be wrong on the timing. I could be wrong on everything else. I might take a loss on it in the near term and then sell it again and look at some put options to trade it later into early 2021. But so far, I kind of dabbled. I sold it fairly high around 56. It's up towards 63 right now. So I'm kind of underwater on that one just in the near term. We'll see what it does. We'll watch it this week. I'm kind of interested. But for the most part, I think that it is a good stage in my stock portfolio to be taking some profit. Same thing in Forex. I cleaned up some positions last week. I closed up on the Aussie, New Zealand for a short-term rally. We're currently trading around 106.43. I closed this around 106.50 last week. All this was a 106 and 105 and 104.50 entry. I missed my 104.10, but I took some partial profits on Aussie New Zealand. I'm looking to see where this one wants to go. Are we going to head back up into 107.50 and 108.50? If so, I'll take some more profits on my remaining position. If it comes back down, you can see here that I have these other entries looking to reload. So 106, 105, 104, all the way down to 101. I'm going to continue to buy some very small positions, build a position up on this Aussie New Zealand to head back into 108 is my first target, and hopefully all the way up towards 113 and 114 for a larger swing. I do like that trade quite a bit. The Swiss yen, this is a really good looking trade. It's at 117.34. Now it's been quite the volatile day. I was actually up about 40, 50 pips as of last week. And I'm curious to see what this does. Maybe I'm not exactly spot on with the level. We sold this around 117.50 in my trading room last week. And my plan is this. I sold it at 117.50. I'm going to sell it again around 118.50 and just kind of sit on it and be patient. So what I'm looking for is maybe this area right here where we have highs in price, lower highs in momentum. This will start to fade back down. What I really like about this on the higher time frame, here's the daily chart. Okay, what I like on the daily and weekly chart is we have some really nice pocket levels back to around 116 and 115.60. So basically, here's what I'm doing. I'm looking for equal highs around 118, possibly into this 118 to 120 area. If you can kind of block this off and use some decent trade sizes, small trade sizes, looking at highs to form in here. So maybe we have a high forming like this. Maybe we have a breakdown of this little trend line. This is a break, retest, and we start to fall back down into 115. Maybe this goes up one more time to a slightly higher high, still maintains that divergence between price and momentum, and then falls back down into 115. I could see this falling as low as 114, at least in the next maybe month or two. But I do like this trade quite a bit. We also have some really good larger harmonic patterns that are still showing some bearishness. We have major resistance there around the 118 level. So I am short on Swiss yen. I am long on Aussie New Zealand. I am also long on the Euro Swiss. We're at 107.74. I just missed a buy trade here. I'm a little bummed. It's not done yet. You know, I had a buy trade in around 107.30 that did not get filled. I have a buy trade down here on 107 that has not been filled either. This is another trade that on the higher time frame, I'm looking for price to go up. One big level that I'm watching, even with the Swiss National Bank rate decision this week, which will likely stay unchanged, is I'm looking for this to make a swing and make good on the yearly pivot, which is 110.45. That also happens to be this previous resistance. And that is also shy of this previous support. So we have major support around 111.80. We have a previous high around 110.50. We have a yearly pivot that just happens to sit at 110.45. So I remain long for that reason. I've built most of my position down here around 106 and 105. I keep adding little scalp trades at 107.50 and 107.100. So that could be what happens this week as we have a trading here around 107.50, 107.100. See if it pops right back up to 108, taking some profit. Falls back down, buy it again, pops up to 108, take some profit. I continue to buy those levels between 107.50 and 107.100 to take some short-term profits, but I'm hoping Euro Swiss makes a run and, like I said, makes good on the yearly pivot at 110.45. Euro dollar, we're at 121.50. I think what I'm going to do is start protecting some profit. It was up to as high as 121.60 today. 121.70 highs. I think what I'm going to do is I have a buy trade in at 21.08. I was looking at some levels to play. I think what I'll do here is just go ahead and take about 40 to 50 pips of profit. Or this, what I will do instead is rather than just closing and taking profit, I want to see if we can get this thing to drift a little bit higher. I think what I will do is take a +5 or +10 and guarantee my profits on my 21.08 entry, and then I will cancel my 20.50, my 2,000, my 19.50, and my 19. Those are it, and then my 19.20 was my stop. So I was looking to build positions on the euro dollar and see if this can go up into 122.50 and 123.00. Instead, what I'll do is I'll just move my first trade to break even or better, and then cancel those other pending orders. So that way you can't lose on this trade. Swiss yen, we were up about 40, 50 pips. I was considering some profit protection. But now that we are just up a few pips on this one, 117.36 from a 117.50 entry, I'm just going to let this marinate another couple of days. You know, perhaps it's a fall again off the 4-hour level. Maybe it pokes the highs for more divergence, then falls back down. But I really like this daily and weekly pocket. Give it some time. That pocket, especially on the weekly chart, you know, a really strong candle. This whole weekly candle is a really nice bullish created move. So this is, to me, this is an inefficiency. This is a pocket. I think we're running back up into equal highs. Let's find some tops on the Swiss yen and look to fade this back down into 115 or lower. Anything else that I'm really liking this week? I really like the pound crosses day to day. So watch and see how this plays out. Like I said, after this video, you know, take a look at my Keep It Seriously Simple video series. I have that breakout strategy with the currency strength chart. On the 1-hour chart, you can see that we had some gaps on the pound crosses. This is a really easy strategy. Here is the 2 a.m. candle right there. So let me use a couple of lines. So we have, this is 2 a.m. to 3 a.m. So there is my low right there. And there is my high right there. So that candle that I'm highlighting, that you can see the arrow over, that is a 2 to 3 a.m. Eastern time candle. What I then do is I go down to the 5-minute chart and I look to see, is there a breakout that I can trade? And you notice that we have the low to high within the hour. We have some 5-minute breaks above that. If you take a buy trade in here, it's around 7,700, just a little bit more than that when the bullish candles start to get above on a 5-minute chart. We're looking at buy trades around 77.10, stop around 76.80, so about a 30 pip stop. And this runs from 77.10 all the way up to 77.60. It's 50 pips, right? 50 pips to the upside for about a 30 pip risk, decent intraday trading. I know that it came back down. I know that there's still a gap from Friday's close to Monday's open or Sunday's open, but again, I'm looking for that London session pop, and there was a nice, 30, 40, 50 pips to the upside for some short-term gains. It's the same strategy on all the currency pairs. If the pound is moving, it's a really straightforward way to get some 1-hour structure and some 5-minute precision. So again, take a look at that video. It's currency strength and simple breakout. That's what it's called. It's module 11 in my Keep It Seriously Simple video series. Anything else for this week? I think that's about it. I was looking at kind of everything coming on. Electoral College meeting. We have, just to wrap up the year, like I said, last full week of trading for the year. Just to put things in perspective, the year-to-date performance on the indices, the NASDAQ has carved out 37.95% as of last week's close. 37.95. Okay, that's with a 60+% rally off of the 40+% dip in sell-off in March. Crazy. So 37.95 on the NASDAQ. The S&P is up 13.39. The Dow is up 5.28, just barely hanging on those highs. If the Dow is going to start pushing back below 30,000, the Dow may not finish positive on the year. We'll find out. Gold. We're up to 18 and change. Gold is up to as high as 2080. We are up from last week's close, 21% on gold. The 10-year Treasury note is down to 0.9. That's over 100 basis points lower. Oil is down 24% from the highs around 60 of last year. 24% base. We had the zero. We had negative futures prices on oil, but I'd say a pretty stable recovery on oil for the most part. I did find a way to close out my UCO and USO positions. I was long on both of those since that March crash. They paid out really, really well. I was fortunate to, I was underwater a little bit because I got in too early. And as oil was recovering, it was kind of a lagging move in UCO and USO as those ETFs were being priced differently. But I did end up carving out some gains on USO and UCO, which I'm happy to be out of now. And I can be, again, once again neutral on oil. So let me go ahead and start winding things down for this weekly outlook. Again, Brexit negotiations getting extended. Watch that pound price action through the week. COVID vaccine is going out, worldwide, which is pretty exciting. For those of you that are getting the vaccine, be safe. For those of you for the holidays, be safe. Last full week of trading before we have holiday markets next week and the week after. U.S. government shutdown was avoided last week by a 1-week extension. We'll see what happens as of Friday's deadline. Will they build in a stimulus plan for round 2? We will find out. Okay, our hopes and dreams rest in Congress. They can't agree on anything, but I think that it's in their best interest to make sure that they don't look like fools. So I'm sure that there's going to be some type of compromise. Just make it happen and push it through, whether it's good or bad. Because I know the reason this was also kicked down the road was because they couldn't agree on a defense spending bill or withdrawing troops. IPO prices are all over the place. Essentially, it's like an IPO, let's double the price. And they're coming out, like I said, Airbnb, DoorDash were big ones last week, and they were massively mispriced. Facebook and Google under some big scrutiny, and the Electoral College. I just saw that on the Market Watch update here. Take a look. So Market Watch, the front and center headline is Electoral College meets amid threats of violence and pro-Trump protests. So it's going to be a mess. It's going to be a mix, whether it's, pro-Trump or anti-Trump. You're still going to have a country divided. You're still going to have a lot of mistrust in the government. You're still going to have a lot of mistrust now in voting in general. And we drag this into January with a Senate runoff race. That's going to be a big deal. So politics have been exhausting for the last 4 years. They've certainly been exhausting for the last month and a half. I'm looking forward to just trading and focused on what can we do to finish the year strong, clean slate it, enjoy. If you had a great year, which hopefully all of you should have and did, clean slate, start it next year and do it all over again and just be ready for anything. All right, everybody. So on that note, I'll go ahead and wrap it up there for the weekly outlook. I'll see everybody in my trading room this week. I appreciate all the thumbs up, the likes, subscribe, click the notification bell. Videos like this for my weekly outlook, my Keep It Seriously Simple video series. Get those notifications on your phone. Know when they come out, and have a great week. All right, looking forward to trading with everybody for the Flex Trading Room this week. Let's make some pips. Let's see some pound pairs, and I'll see what we have in the stock market as well. I'll be sending out my Trend Seeker Pro alerts as well Monday through Friday. Okay, see you soon and see you this week in trading, everybody. Take care. Bye.